Hey everyone, thanks for coming to our panel. I'm Alex Thorne, I'm the head of firm-wide research at Galaxy Digital. And before I introduce the panel, I just wanted to say that Bitcoin is the oldest, most decentralized, secure, credibly neutral blockchain. But it has no pre-mine, it has no foundation to fund grants and fuel inorganic growth on its platform. And that makes investing in the Bitcoin ecosystem and in Bitcoin companies a lot different than in the broader cryptocurrency ecosystem. In 2021, $33 billion was invested by venture capitalists in crypto and blockchain companies, but only a tiny portion of that went to Bitcoin-only companies. So I want to investigate why that is, see what we can learn about the Bitcoin investable landscape. And to do that, I'm joined by this excellent panel of Bitcoin investors, venture investors. I've got Grant Gillum from 1031, Christopher Collicott from Trammell Venture Partners, Tyler Evans from UTXO Management, and Vikash Singh from Stillmark. So let's just start it off. And I guess, Grant, you're sitting right next to me, so I'll ask you first. Describe to us what the venture landscape looks like in Bitcoin. What are you looking at and investing in? What's interesting in the space?
Well, I guess one thing, just to maybe piggyback on one of the things you said, is what's really interesting, if you look at the amount of capital that's been raised for the broader crypto ecosystem, which you can expand it to Web3, DeFi, all the fancy buzzwords, is probably $50 billion. And there's a few of us up here that are focused exclusively on the Bitcoin ecosystem. The amount of capital that's been raised specifically for Bitcoin-focused venture strategies is less than 100 million. But the way that we see it is that we're moving towards a more Bitcoin-oriented world where over time, eventually, everyone, whether it's individuals, institutions, businesses, will be interacting with and holding Bitcoin more. And so in terms of the investable landscape, I think it's immense. I think it's bigger than what most people imagine, because as more people get onboarded to Bitcoin, there's going to be infrastructure that's needed to support that.
Oh, can we get Chris's mic going here? Christopher's mic, excuse me.
Hello.
We'll come back to you in a second, Chris. I'm sorry. Tyler.
Well, yeah, and I would add to that, Grant, I think kind of within the industry more broadly, it's easy to get distracted by new shiny things. And there's so many smart people, so many talented engineers building stuff that the pace of stuff moves so quickly. And so, there's always new shiny things to focus on, but we forget how many foundational things there are still to build infrastructure, adoption, on-ramps for Bitcoin in terms of the addressable market of bringing sound money and a store of value to the world population. And so, there's green fields everywhere we look with a global perspective in terms of how we get Bitcoin in the hands of more people.
Yeah, I would add that we're serving what has historically been a huge gap in professional venture capital funding for these founders. Part of that is driven by some practical reasons. We've been extraordinarily meticulous not to do damage to layer one, to Bitcoin Core. Our view is that this is the internet's monetary base layer. And so only a few years ago, Lightning came to the scene, opened up layer 2, and channel capacity was very thin. So we needed more channel capacity, a little bit more stable Lightning network. We needed more robust credit markets around the asset class, and a few other important features. So that has to do with the timing. It's really interesting, though, and ironic on some level that it's been missing. It's absolutely nascent, but that is not going to stay that way for very long.
Yeah, so in 2021, the big story for Bitcoin was the maturation of the Lightning Network. And while that manifested in growth of nodes, channels, total capacity in the network, ultimately, at a conceptual level, Lightning emerged, and Bitcoin, moreover, emerged from, something that, was seen as digital gold to a truly scalable payments layer and programmable, more specifically, that was capable of supporting sort of nation-state adoption. So from our perspective, looking forward in 2022, riding the momentum of 2021, we're really really looking at, okay, how can we increase the accessibility of Lightning and really bring Bitcoin to 1 billion people? So to do that, we're putting ourselves in the shoes of different stakeholders trying to interact with Lightning and Bitcoin. So in El Salvador, sure, the government made it legal tender, but if you're a merchant like Starbucks, Pizza Hut, practically speaking, do you have usable APIs, reliable enterprise-grade infrastructure that's going to allow you to interact with Lightning? Not really, so we invested in Ibex Mercado. If you're a developer or an 18-year-old student at a hackathon, right, you want to build a Lightning app, do you know how to use Docker and put up your own node? No, so you can use Voltage, and that scales beyond enterprise-grade infrastructure. And now don't even get me started on the channels, with the problems with node and channel management, right, and the data-driven insights that that really requires. So we're looking at Amboss. So for us, it's really increasing the accessibility of the Lightning Network, which will ultimately bring Bitcoin to billions. On the decentralized finance side, right, we also see interesting sort of R&D happening with discrete law contracts. We see financial instruments being built on top of Bitcoin with discrete law contracts. Ultimately, Ethereum took the first wave of DeFi, but people are, increasingly becoming aware that there's sort of new primitives that can enable this sort of thing on Bitcoin, as well as innovation on sidechains. For example, people didn't think an AMM could be built on Bitcoin. With Taproot opcodes on Liquid, somebody in Turkey has actually found a way to do that. That's something we're very interested in because it's fundamentally changing the narrative of what you can do with Bitcoin.
I love that. Let's go further into the infrastructure landscape that you guys all talked about. Those are great examples, Vikash, too. What types of infrastructure and on-ramps, Tyler, you mentioned, are you seeing? And, what needs to be built? I love the dev tooling, channel management stuff you talked about, Vikash, but what else is there?
Even from the pitch day sessions we heard yesterday, a lot of these use cases that people got originally really excited about in Bitcoin, kind of the first wave of adoption, everything from remittances to global store value to escape valve for people living in countries with inflation. Well, here we are 5, 6, 8, 10 years later in some cases, and many of those problems still exist. And the technology has matured a lot. The usability has matured a lot. There's some great tools out there now. And so I think you're starting to see kind of a second wave of entrepreneurs, particularly global entrepreneurs in Latin America and Southeast Asia, who are building things with Lightning and realizing some of these original use cases that got people excited about Bitcoin.
I'd add to that, post block size wars, as block sizers, we leaned into this layered approach. One of the things that's interesting from an infrastructural perspective, given substantial channel capacity, we're actually seeing the opening up of an application layer on the Bitcoin native stack above Lightning, and in conjunction with Lightning and other technologies, companies like Impervious, like VitaLive, et cetera.
Yeah, the way that we tend to look at it is that eventually there's going to be more products and services demanded by Bitcoin holders. So, that is a huge investable landscape, which includes security and custody, it includes payments infrastructure, it includes consumer-oriented applications, it includes sovereignty infrastructure, including hardware and software, and then there's obviously a lot of activity going on in all of those respective sub-verticals, including in emerging markets as well, which is another area that we're particularly focused on.
Let's talk about emerging markets and the global ecosystem. Several of you have mentioned it. What kind of, obviously in different countries that have different inflation profiles, we've seen different adoption of Bitcoin as a store of value, but and with remittance, we see Bitcoin being used to transfer value over time and space to people around the world. But what else is there in sort of the global ecosystem, or how does it differ from the US?
Yeah, so we see Bitcoin as an equalizer in terms of giving people something that they can store value with that has certain monetary properties that are desirable. But the flip side to that is the earning part, and that's something that really Lightning kind of brought upon us, right? So the ultimate vision is ultimately if you have a computer, right, and with internet access, Bitcoin and Lightning will allow you to have a job. So that will equalize the landscape of earning, right? And we see this manifest in digital microtask marketplaces such as Stackwork, right? We see things like AWS Mechanical Turk. We see things like Scale AI. They've proven that digital work ultimately can happen, and ultimately the internet allowed for transfer of value across the internet, or transfer of data across the internet. And the Lightning Network ultimately will allow for the accompanying transfer value to really make that a reality.
I think earning Bitcoin is such a cool concept, to plug one of our own projects. Something that we've done with Bitcoin Magazine is a lot around experimenting with rewarding people in sats for engaging with content, for learning about Bitcoin. And so we built a product called Carrot on the Lightning Network specifically to pay people in Bitcoin for getting educated about Bitcoin. And it's been a huge success for us.
The way, one of the things that I like about what Paul Atoy from Stackwork and Sphinx Chat says is that he thinks that some of the next huge companies are going to come out of the emerging markets because these are areas that aren't blessed with having as stable of a currency as a lot of us are used to having, and in a stable regulatory regime. And so some of these companies will be born out of necessity. And so that's where I think a lot of the innovation will come.
What do you, just still on this landscape topic, because it is really interesting. What about, and we didn't talk about this before, so here's a little bit of a curveball. What about, mergers and acquisitions in this space? Are you starting to see interest from, banks, mortgage companies, payments firms in your portfolio companies as a possible acquisition, as, adoption is becoming much more, much bigger, especially in traditional finance and big companies that have giant consumer user bases that want to bring Bitcoin services to those bases? Are you starting to see interest in general from traditionals or big companies?
It's interesting. We were in the early years of this revolution. Really, we were Series A investors in Kraken, and in the grand scheme of things, this is only a few years ago. Really, 2014, 2015. They're kind of famously and publicly looking to go public next year. Where we're investing at pre-seed, seed, Series A, it's just a little early. And definitely there are people that are reaching out. There's a lot of SPACs floating around, thinking about taking a nibble and this kind of thing. We think that if you're in the business of helping to build the future iconic brands at the cusp of the emergence of a new global monetary order, we want to let those winners ride as long as we possibly can, and maybe we'll do some of our own acquisitions in the future.
Love it.
Yeah, I don't see it yet, but if you put on your pure investor's hat, which I think we're all in this for much more than that, actually trying to make change into the world. But if you think about just from a pure economic perspective, I think that there's going to be a huge amount of M&A activity, because if you think about the amount of talent in this space, right now it's a relatively small ecosystem, and we've seen prior examples that it's not easy to build, Bitcoin-oriented capabilities into legacy and incumbent players, and many have failed in the past. And so I think that what we're going to find is kind of similar to the mining world, where there's this huge bottleneck in trying to get equipment. I think there's going to be a huge bottleneck in trying to get talent that can build this infrastructure, and that's going to drive a lot of M&A activity in the future.
I think mining is a good comparison. The thesis that in the end, the energy producers, the owners of energy producing assets become the miners, or maybe the miners get so big they acquire the energy producing assets. Mm-hmm. Maybe it's the same way in the venture landscape. Who acquires who?
Yeah. Where we're really seeing that M&A activity heat up, Alex, in my opinion, is on the institutional kind of trading side. Firms like Galaxy have been on the edge of building out the services that institutions need to hold and touch and offer Bitcoin to their clients. But the rest of the banks that are now just kind of waking up to the demand they see among the institutional high net worth family office investor base, and the FOMO that they're having about how they can bring these services to market, everything from the compliance to the tax to derivatives on top of Bitcoin. And so I think you'll see some of the big household bulge bracket banks taking some swing at Bitcoin infrastructure companies here over the next 12 months. And we know that they are sending a lot of people here to this conference to scope out the landscape.
Where are they? They're here. Where are they?
Yeah, I think Bitcoin and Lightning is such a significant technological shift that from the perspective of these big corporations, it's not just like, okay, let me acquire a company and now we're up to date with Bitcoin. Really at the grassroots level, at the absolute most fundamental level of how these businesses evolved. Their business models evolved under a constraint where money money was not as fluid as information, right? So it's not as simple as let's acquire. Like they have to do nothing short of rethink how their entire businesses are sort of constructed. That's not necessarily amenable to just simple acquisitions.
I think one last comment on acquisition. We're talking about kind of the end of the growth trajectory of a company and what happens then. One thing that's specifically germane, I think we'll probably get into today, is alignment. And I know for sure that these founders come from a place of principle. Philosophical alignment is very important for what exists in their capitalization structure. And I wonder what the conversations will be like around acquisition, because we definitely know what they're like in early stage investing and who is actually going to participate in rounds.
For sure. No, I agree with that. I think we will see a lot of companies remain independent, and I think there's possibilities to list your company publicly, or maybe even do something creative with a token on the Liquid network. One of the things that I think is particularly interesting is this idea of having equity stakes in Bitcoin companies that remain independent, and then ultimately start to generate cash flow or sats flow, and then start paying dividends in Bitcoin.
I love that idea. I haven't heard the term sats flow either, so I'm a big fan of that.
I'm trying to get sat stream to catch on.
That's good.
Either way.
Wow, this has been great so far. I wanted to change gears a little bit. I mentioned at the top of the panel that Bitcoin has no foundation or pre-mine, and so there isn't a giant pile of money out there, specifically to fuel inorganic growth. When you look at the Web3 and crypto VC space, there's an enormous amount of capital. A lot of that capital is being raised on the promises of large total addressable markets for things like the metaverse and NFTs and DeFi, which are very sort of forward-looking, because when we look at those spaces today, it's a lot of inorganic growth and incentivized user behavior. When you, as a venture fund investor and director of a fund, are raising money from LPs and traditional allocators, traditional investors and allocators, and sort of they're also hearing these big pitches from these giant funds with over $1 billion to allocate. What does the pitch sound like from you guys? Are you defending Bitcoin, or what is the pitch, right? And how's it going with them?
So to start, I would challenge some of the underlying assumptions in those types of conversations about the ephemeral nature of this alleged massive TAM. Because make no mistake, we care about high growth, we care about large markets, but I challenge some of those assumptions to begin with. But I would also suggest in those conversations, let's talk about capital efficiency. To the degree that matters to these LPs, and I believe that it does.
Yeah.
We're seeing some of the highest, efficiency in terms of uses, deployment, and internal investment in these companies of capital. I think that's not talked about often enough.
That's interesting. I think did they? But the pitch is so Hollywoodized, the crypto pitch, right? And Bitcoin is so foundational. It's not even Web3. It's fixing the money, right? It's not a upgrade to the internet. It's like an upgrade to humanity. Is that harder to sell, though?
That's true, but if you look at let's take an Unchained Capital. Everyone's familiar with the brand. An amazingly high retention kind of company. These are customers that are thinking not just about today or tomorrow, they're thinking about their children and grandchildren, multi-generational wealth, and that kind of value, that kind of stickiness, and that kind of value add, bidirectionally in partnership with customers. Like, it's really difficult to see any of that in the broader crypto landscape.
I think it is a tough sell. I've talked to a lot of these types of groups. For sure, we're making traction there, because there are some, there are university endowments that are investing in this space. There are university endowments that are holding Bitcoin directly as well. So there's progress being made, but I've had a constant stream of just we want to take a more agnostic approach, not take a specific point of view on a cryptocurrency. I've got every rejection in the book in that respect.
I would add just, there's an opportunity here too. I think if we're even directionally half right about what Bitcoin's going to do the next 5, 10, 25 years, we're trying to take a slightly different approach. When we raised the first TVP Bitcoin Venture Fund, we didn't want to go talk with all the endowments or the banks, the the foundations just yet, because everyone's on their journey. We recognize that there's some internal conversations there, and does exactly what you're describing. So literally every check, the family offices, the high net worth, ultra high net worth people, they're all aligned on Bitcoin. Because similarly to our founders that have conversations like, hey, that's really cool, like Chase Perkins, CEO of Impervious, talked with a generalist VC, had multiple conversations, and about conversation 5, someone said, this is really cool, but we love the Bitcoin thesis. Why don't you build on Solana? So needless to say, I'm not really happy with that other venture partner.
Yeah.
But we also have conversations with LPs and we want alignment. We want a table stakes conversation that people that get it, so that we can get a flywheel of innovation. I mean, some of these people are post-exit entrepreneurs in their own right. They're thinking about building the next company on Bitcoin. So we don't want to have those educational conversations with our capitalization, and people we represent. So a little bit of a harder lift, but really important to do because we want to grow purposefully for the long term.
We've taken a little bit of a different track here too, Alex, where we've been fortunate that most of the venture investing we've done over the past couple years has been proprietary, just off our existing balance sheet. But where we see the opportunity and where we're going to be focusing our energy this year is not going to those traditional family offices and endowments, but instead trying to harness the value that's been created in the Bitcoin community, and specifically the Bitcoin that all of you guys are holding, and build something that's acts more like an endowment for funding the Bitcoin ecosystem.
Love that.
Where you can basically contribute your Bitcoin, lock it up for a long time, but not sell your Bitcoin, and just take the yield that's earned from that Bitcoin collateral over time to fund the next generation of startups building on Bitcoin. Almost like a no-cost insurance policy to help grow the entire ecosystem. So we want to build some of those flywheel effects within the Bitcoin community where, we can do our own thing. We don't need to go, play nice with the big banks and the endowments that are taking the spray and pray approach to this ecosystem, and where we can get people that are truly aligned on the same vision for how we grow it.
Yep. And we want to see those people that see it now to succeed in an outsized way. Like, hey, great, rich people getting richer. I think I like the democratization angle.
Mm-hmm. Yeah, that's a cool idea.
Yeah, so by choosing to focus in investing in the Bitcoin ecosystem, it's a refusal to compromise on decentralization, security, dependability, and scalability, right? We refuse to compromise on these things, and we think businesses that are going to be built on that sort of stable and solid foundation are ultimately where we want to put our money's worth. Right, so that's the first part. The second part is kind of educating our LPs and really telling them, what actually is the TAM of Bitcoin, right? So people are like, oh, Bitcoin is so narrow. This kind of idea that a Bitcoin-only thesis is a narrow mandate is completely incorrect. Ultimately, with Bitcoin plus Lightning, you get the equivalent of HTTP 402. When Sergey Brin, Larry Page, and these people, they were building Google, Mark Zuckerberg was creating Facebook, all these people were building, the most successful internet businesses of today under the constraint that they didn't have HTTP 402, right? Mm-hmm. So now you can expand Bitcoin, say, hey, the TAM could be social media, it could be content streaming, right, with applications built on top of Lightning, right? We're fundamentally seeing that it enables better monetization contracts, it enables more people to earn, we're seeing it have good ramifications in the gaming ecosystem. So really the TAM of Bitcoin, the way that we see it, is unlimited, but it can only be unlimited and succeed if you succeed at making that base solid.
I love that. I think that is core to Bitcoin's development vision and the community's caretaking of the protocol, obviously building a strong foundation, not taking shortcuts for short-term gain. That is core to Bitcoin, so I totally agree. Just a few more minutes here. Let's skip ahead and I'd love to hear and we've already heard some from everyone, but what's getting you most excited over the next sort of, several years in Bitcoin startups and companies? What features or applications can users expect that will really change the game over the next few years?
I already mentioned a couple. I think the opening up of this application layer is just sort of a novel concept for so many entrepreneurs out there. It's like, oh shit, I can actually do that on Bitcoin now. There's about to be a whole lot more of that because of some new enablements, specifically at layer 2.
Right.
For us, historically, we've tried to very cautiously pay attention to what's happening in broader ecosystem in crypto, so that we can understand where there are massive markets with a lot of validation. And decentralized finance, if you're talking about decentralized finance, you're talking about Web3 and you're not talking about Bitcoin, you've missed the point entirely. So some of these very safe relatively safe risk and return propositions with yield and return. Those are kind of big themes generally for us. A lot of excitement is going to happen there. And I think it's a buckle the F up moment whenever people realize, oh, I can build this, but build it on the money.
Yeah.
You know, I'd maybe mix it up a little bit to answer this question
Okay.
and say, I really like this idea of the sats flow generation. And like the concept really is you can earn for the same amount of sats, it's easier to earn that same amount today than it will be in the future. Or said another way, for the same amount of work, it's going to be harder to earn the same amount of Bitcoin in the future. And so that's really going to highlight the opportunity cost of deferring sats that you could earn today in exchange for hopefully earning more in the future, which will be harder to earn. And so I think that that's going to really focus people more on, and businesses more on, transitioning to a sound, profitable, cash flow, sats flowing business model sooner than what we've seen in traditional VC.
I love sats flowing.
Yeah, so there's a lot of interesting things. We kind of like to bucket things into sort of the Moonshot or Lightning payments bucket, right? Bitcoin as programmable payments via Lightning, and then there's also Bitcoin, the asset or the sort of store of value. From the investment perspective, it's actually convenient to kind of abstract those as the two sort of separate things. There's companies like Casa, they advance sort of store of value security. Then you see Lightning companies evaluating this. Eventually, we see these things kind of converging, and very much this is going to be like a 1 + 1 = 5, because never in the history of the world have we seen an asset or technology simultaneously fill these kind of properties. And I think sort of once that clicks, it's really going to be unstoppable.
Our most recent investment in the space was kind of in the DeFi on Bitcoin space. And what I'm excited about is with Bitcoin being the monetary asset, you truly have this pristine collateral to tap into. But that's only kind of the bottom layer to keep going with the analogy. And so unlocking the rest of the financial services from borrowing, revolving credit, yield, interest-bearing accounts, so that you can live your entire life and get all your sats flow directly into one place that settles natively to Bitcoin at the bottom, I think is a massive, massive opportunity.
Absolutely.
I love it. Well, we're out of time. Thank you, everyone who's watching and who came. If you are a Bitcoin founder, come find Grant Gillum at 1031, Christopher Collicott at Trammell Venture Partners, Tyler Evans at UTXO Management, and Vikash Singh at Stillmark. Thank you, guys, for joining us. Really good conversation. Appreciate it.